Hi there, everyone. This is Bruce of Fleet Capital Management. Today is Friday afternoon, the 20th of September. I had to think for a minute. The 20th of September, 2024. Market is closed. We had our first interest rate decrease in quite some time. That was exciting. And I've started adding some securities because of that. So let's just jump in, and I want to show you a few things. We always need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. As you know, I'm always available. Bruce at Fleet Capital Management. So in the stock selection process, when I'm looking for stocks, obviously I'm looking at the market trend, health, and seasonality. That's always number one. We look at that every Friday, and I'll go over that a little bit more. I do look at some sector seasonality, and then I do fundamental analysis screening before I get down to technical analysis. I'm just going to show you a little something about the fundamental analysis screening because I've created one new screen that I'm pretty happy about. So when you create a screen, what you do is you create rules. Don't worry about what's on this because these are summaries of rules, but I have a certain GF score that I need to see as a minimum. The Piotrowski F score, I want to see a 7 as a minimum. Piotrowski, I'll just tell you, when he's looking at ways to judge if the fundamentals of a company are getting better or getting worse. And so that's what this is. I'm looking at profitability ranks. The price has to be greater than $30 a share. The return on invested capital needs to be more than 15%. I don't buy OTC stocks. I want a growth rank of 9 or 10, which means it puts it in the top 20% of companies in the United States. I want a predictability rank of 3.5 or higher. It only goes to 5, so it puts us in we're looking for very high quality, good growing, predictable earning type of companies. So that's what the rules are. And then once I do the scan brings up every day all of the stocks that meet all of my criteria. So when a stock appears on this page every day, I know that it's already been scanned for, it's already it's already passed all of my criteria. One of the stocks that I added today is from this list. It's this one, Excel Service Holdings. So it came right off of that list. It actually had a GF score of 100. It had a growth rank of 10, which is incredible. It had a predictability score that was very high, 4 out of 5. A profitability rank of 10. So it met all of my criteria. I'm looking at growth rates and also institutional ownership. I like to buy stocks that have very high institutional ownership. For instance, there's a stock down here. I think it's a Mexican company. It only has 10% is held by an institution. I would not buy that stock. Institutions move stock prices. I'm looking for pretty much 80% or more of the stock being owned by institutions. So we create the rules. It spits out a list of stocks. There were actually 50 stocks that came out in this one. And then what I wanted to show you, and this is a new piece of technology that I've just purchased, and it's fantastic. What I do is after I create a screen, I do a back test, and it's a real back test. On this particular test, I only went back a couple of years. And what happens is it buys the 10 top rated stocks out of the list. And every 6 months, it does a rebalance. So anything that's no longer on the list gets sold, and anything that is on the list gets held. And that's just one very good way to do a back test. It's not perfect, but it is really good. The reason it's not perfect is if a stock went down, 10, 15, 20%, realistically, we're stopped out of it. So, but if it goes down 10, 20, 30, 40% during that 6 months, it's still in here, but we realistically would not have it. But with some of the limitations that are there, I want to show you what the result is. And this is going back to the first day of 2021. This is what's called our equity graph. If we started with $1 million right there, what we would have ended up with. These lines up here are very important. The red one is the NASDAQ, the yellow one is the S&P 500, and the blue one is my portfolio from this screen. So you can see over that period of time, this screen outperformed both the S&P and the NASDAQ. If you look over here to the right, these bars, the dark green is this portfolio, and then the first light green is the S&P, the second one is the NASDAQ, all the way across. And this is 1 month, this is through today, 1 month, 3 months, 6 months, year to date, 12 months, and 3 years. I didn't go out as far as 5 years on this particular one. And you can see in each of those time frames, we outperformed the S&P and the NASDAQ. So cumulatively, that's where we got this blue line. But it's nice to be able to see that in every single time slice, if you will, this screen, this portfolio outperformed. If you look up here, there's a risk analysis that is run. And for those of you who remember what alpha is how much extra return am I getting over and above what the index would have provided. And an alpha of 1, 2, 3 is pretty fantastic. This is almost 13, which is just unheard of. Beta is measuring the volatility relative to the market. This is the only number I'm not crazy about. I'm working to get this down, but this has a little bit about 33% more volatility than the market. But remember, if it's positive volatility, we love that. We just don't want the negative volatility. It has a Sharpe ratio of 0.8, which means it's doing anything better than 0.00 means you're getting more return for each unit of risk. Sortino is looking just at downside. This is a good number. So everything so far is looking good. And then down on the bottom here, you can see it just breaks down what's all over the chart, but in numerical values, 1 month, 3 months, 6 months, year to date, 12 months, 3 years. I didn't run 5 yet. But what you can see is in every single time slice, we outperformed the market. So this is a very, very viable screen that I'm beginning to use and have been able, now I can finally back test these screens in real time. And that's great. So this is just one of the screens I use to buy stocks, but I thought you might find that interesting. And I can run this back test anytime. And then, of course, once stocks go into the real portfolio, then we're tracking forward in real time. So the most important thing always is what's the market doing? Is it going up or down? And so let's take a look at our matrix, which is updated through today. And everything except for one is in the green. And on the weekly chart, this says mixed because I use two different indicators. I'm using the price volume trend, which is kind of like on balance volume, and the MACD. I have found that using the two of those is really good. And if they're mixed, that's okay. It just means one's slightly up and one's slightly down, but they're moving in the right direction. Of course, if they're both up, that's even stronger. But you can see, basically, we've got green across the board. Our VIX continued to fall. It's now 16.07, which is a fabulous number. I love to be around, I would say between 13 and 17 is kind of the sweetest spot there is. I really like that. But with all that, we're still in this seasonal period. If you look at the S&P 500, between May 5th and October 28th, it's that blank spot, which means there's no real clear trend. Things can go up and down. Things can get crazy. We're still in there, even though things are looking good. So speaking of things looking good, here's the S&P 500 on a daily chart. Here is today. Each bar is 1 day. And let me tell you what I like about the chart and why I have started buying some securities. Okay. First of all, we were kind of in this little range here. You can see the top of that range and we broke up above it. I like that. We're in a good spot on the linear regression. Our moving averages are starting to separate. I like that. If we look down here to the RSI, that yellow, which is the moving average of the RSI, is above the 50 line, which is that white or gray line. And the actual RSI is above that. Very positive, like that. Here's our volume. PVT is green, like that. And here is the MACD, which shows I just lost it for a second, momentum. And you can see we have crossed up and we're above the line. So everything looks good. This little symbol down here is telling me that Powell, Fed Chair Powell, is giving a speech on Monday. So prepare for some volatility on Monday, because whenever a Fed chair or Fed member talks, things usually bounce up and down. If I go to the weekly chart, and let me smooth this out just a little bit. You can see we're still in a really strong 45-degree angle. Each one of these bars is 1 week. And you see that little red dashed line? That means that the market was in this, what we call a channel. It was just stuck in that area for some time. And when it breaks out, which it did this week, that's generally speaking a very strong sign. Now, we haven't gotten the strong sign on the RSI and on the MACD yet, but you can see they're like kissing. We're just about there. But when we break out of a sideways, remember what I've always told you, the market can go up, it can go down, and it can go sideways. When we're in a sideways market, a consolidating market, we love when it breaks out, and then we can go in and buy. So that's on the weekly basis. Let me see if there's anything else on the charts that I really want to show you. Bear with me one sec. Here are the 5 stocks, firm stock picks, depending on your account and other things. You may not own all 5. This is the one we went into today. Unfortunately, it fell back down just a little bit, but I'm certainly not worried about that. And we also added QQQ again as part of our NASDAQ exposure. So we're not fully invested. My guess is that we will not be fully invested until the 4th week of October. That's when things really start to heat up. But if, because of the Fed interest rate cut and breaking out of these channels and such, if we get some decent upside between now and then, I definitely want you to participate. But if you see that we're still holding a fair amount of cash, it's just because we are in this seasonality range, and we even if you look here and you look at all of the price data, and this was since July 15th, we're just breaking above that. You see that July 15th high? We're just breaking above that now. That's why I'm starting to add securities into here. We were just sort of sideways for quite some time. We went way down, we came up, we went back down, we came back up, but we've broken out of, if I put a line right there, let's see why that didn't happen. Let's try it one more time. Right there, you can see we just broke above it. And that's called a breakout. And we really like to see that, because until it breaks that gray line, until it breaks out, it can't go higher. And now we have just broken out. We might come back down and retest it. I'm not worried about that. That's normal. And then we will hopefully continue higher. So that's the story for today. If you have any questions at all, please let me know. I realized that I hadn't received even a single question about the new performance reporting or letting Blue Leaf go. So I'm hoping it's because I explained it well and you're happy with what's going on. But yeah, I am too. But if you do have any questions, just let me know. You know I'm always here. Have a wonderful weekend, and we will be back at this early Monday morning. Talk to you then. Bye-bye.